Hey, everybody, Tom Gentile. Welcome to Patterns and Profits, my weekly podcast. Well, it's been a bi-weekly podcast. Come on. And we're at the end of August 30th, 2024, heading into another Labor Day weekend. This one's coming quick, isn't it? I mean, literally, it's right there at the top of September. Anyway, before we get into kicking back, grilling out, maybe at the beach, maybe hitting your favorite golf course, maybe just resting after the hard week of work that you put in. Let's talk about August. Let's talk about what I see happening in September. And I'm also going to tease you with something that I'm working on for this year's election in November. All right. I'll get to that at the end of the podcast. But before then, August. All right. So August ended up being a V-shaped recovery. I mean, if you think about it for a moment, you don't have to go any farther than like the Dow, the S&P, the NASDAQ. What ended up happening? August dropped literally the first week. The first week, we saw drops in all the major indices. I think, if you take a look at like the Dow, yeah, it dropped inside of about 3 days. But if you take a look at the NASDAQ, I mean, it did a big drop in a few days as well. We kicked out double-digit drops from the beginning of August to literally a couple of days later. Well, all that has come back and then some. All right. So a lot of the reason that this happened was there was some nervousness coming into some inflationary reports. All that went out the window after the labor statistics, after it was told that inflation dropped in July to its lowest level in 3 years when you look at it annualized. And that set the Fed to basically stop the concern of hikes, even stop the concern of leaving rates where they were. They're ready to cut. They're ready to cut. Central bankers are ready to cut. Chairman Powell confirmed this last week. So since then, the markets have been a little bit volatile. All right. What traders are looking at, folks, if you want to know what the traders are looking at, they're saying, all right, talk is cheap. Okay, we gave you the run up, but talk is cheap. Let's see something happen. And the proof will be in the rate cut. So what has happened since our last podcast together? Okay, so if you take a look at, let's start with the Dow. So the Dow Jones Industrial Average, it started the month out. It started out the month on a good note. We were trading above 40,000. In fact, we were 41,000 at the beginning of August. We quickly dropped to 38.5. We bounced off of 38.5. Guess where we are right now? I said the markets were going to move to all-time highs. Let's see how we did. And when I say the market, I say the big indices. The Dow, check. It made all-time highs. It made all-time highs on Monday of this week. It did it again later this week, all-time highs. So, I mean, as of this podcast, we're at 41.6. That's incredible. Incredible after what happened the first 3 days of August. Do you realize that we've gone from 38.5 to 41.6? I mean, think about that. 39, 40, 41. We've gone up. I mean, we dropped very, very quickly inside of 3 trading days. But in the next 3 weeks, we got it all back and then some. We are, in essence, I want to say probably close to double-digit moves off that bottom. It's fantastic. How about the S&P 500? Let's talk about it. This is where I spend most of my investing in trading within the stocks in the SPY. So SPY put in an all-time high back, let's call it July 15th. it dropped from July 15th down to that low. Oh, well, we went from about 565 down to 510. So we dropped 55 points, almost 10% in the S&P 500. The majority of it came the first 3 trading days of August. Where's the S&P at? I said the market's going to move to all-time highs. The S&P, it's almost there. I mean, it is literally back building. Isn't that what the tornado chasers say when they look at storms? That storms are back. When they see storms, they say storms are back building. And what that means is that a tornado is going to drop. And it looked like the markets for the last 2 weeks have been back building right around the 560 to 565 area. And our all-time high is just above 565. So 560 to 565 area, we're back building right now. We've been back building for 2 weeks. If there's ever a chance that these markets are going to take off to new highs, it's going to happen really soon. And yes, that you could argue. I could even argue with myself because, for the last 10 plus years, the first 2 weeks of September have not been kind to the markets. Typically, we see sideways to down. But with all of this price action sitting on all-time highs, you got to factor that in. You got to factor in that the Fed is looking to cut rates. You got to factor in that the economy is still doing pretty well. And you got to factor in also that the Fed, they're sitting here. They've got to do the Goldilocks thing here. They can't raise rates anymore. It's going to hurt the deficit. They can't lower rates too much. That's going to spook the markets. And it's going to throw a message out there that the Fed was behind on the rate hikes and they're behind on the rate cuts. And if the Fed cuts rates too much, traders are going to be looking at it saying, well, what does the Fed know that I don't? Why are they cutting so much? So they have to Goldilocks this thing. And the best way to Goldilocks this is with a small rate cut followed by liquidity injections. All right. Quantitative easing, whatever you want to call it. QRE, quantitative re-easing. I just made that up. But if they inject liquidity in, if they take the US dollar, and just print more money, they can do that. And that's kind of like hiding. That's hiding inflation. They print more money and the markets are going to jump up on that news. And I think this back building is what's happening, right? How about the NASDAQ? Well, I take a look at the QQQs, and the Qs are really, if you take a look and see what happened to technology between, the second week of July to about the first week of August, you're going to see the Qs highs at 500 and their lows very close to 420. There was an 15%. We dropped 15%. And the only time everyone's really started talking about it was the first 3 days of August, when we went from 475 to about 425. We dropped 10% in 3 days, but we really were down 15% since the beginning of July. All right, so what's happened since then? Again, remember I said markets going to make all-time highs. Well, it happened with the Dow. It's happening right now with the S&P. It's not happening with the NASDAQ. The NASDAQ is sitting on, think about this. The high was 500 back in July. The low was 420-ish in August, and we're at 475. So we're just above at the average over the last 30 to 60 days. All right, it's positive, but we're nowhere near new all-time highs for the NASDAQ. Now, let's go into it a little bit more. I said that commodities like gold were likely to move to all-time highs. I'm talking about what I discussed. I've been talking bullish on gold pretty much for the entire year. You all know that. I've been talking bullish gold literally quite often. And I said it a couple weeks ago that commodities like gold were likely to get a good kick. What about GLD? GLD is the street tracks gold. It tracks gold, what, 99%? Gold's hitting all-time highs. Gold has hit all-time highs twice this week. So it's there. Okay. Brand new highs were in the 233s on GLD. Haven't been there before. Doing it right now. I see 250 in GLD's future. Said that a lot too. But we're back building. We've been back building the last couple of weeks on gold, and we're hitting new all-time highs. We've spiked to these levels, but we never closed at these levels until this week. All right. So stocks are up. Yep. Gold's up. Yep. Bond market's moving higher because we're looking for a rate cut. Yep. I did mention oil. I've mentioned oil, and I've said I'm not really fond of oil, that it's out of season. Okay. All the leaves are gone, and the oil is gray. I'm not gonna serenade you. That's not my forte. Well, here's what's going on with oil. If you want an update, oil's highs were 82.50. Oil's lows were in the high 60s. Oil's sitting right dead in the middle. It's moved up to the upper range, but after July, we said that for the next several months, oil's going to be seasonally bearish. Right? Well, what was happening in the middle of July? We were above 80. Where are we at right now? Mid 70s. I expect to see this go down. And if we get some sort of a longer ceasefire with Russia and Ukraine, if we see some sort of peace agreements happen in Gaza, in and around Gaza, that's only going to further push the price of oil down. All right. Finally, as we're going to round out August, let's talk about Bitcoin. What's going on with Bitcoin? Well, here's one that I was expecting us to climb back up to and get into those 70s. If we could get above 65, you know what? We got above 65 for about 5 minutes this week. And of course, we came tumbling back. It was actually over the weekend we got above 65. Came tumbling back. And boy, this one's just, Bitcoin is one of those, the more volatile it is, the more hard it is to get a prediction. Therefore, you got to think longer term. And so for the month of August, we've seen Bitcoin at above 65. We've seen Bitcoin below 50. It has been in a 15, is that right? 15,000 point range from below 50 to above 65. $15,000 range for the month of August. Now, the beginning of August, we saw a lot more volatility than we're seeing right now. But you know what we're seeing right now? We're doing $5,000, $6,000 volatility range here as we get to the end of August. Now, I still think Bitcoin, we have not seen the highs for the year for Bitcoin. Those of you know I am a Bitcoin perma-bull. Those of you know that I've had Bitcoin now for over 10 years. I think it's over 11 now. But what have I done lately in Bitcoin? Well, for this month, I'll just let you know this month, I have made I've made 4 Bitcoin purchases in the month of August. I can tell you right now, 2 of them are close to where we are right now. One was well below. I grabbed Bitcoin at 50K back at the beginning of August when it made that big drop. Had a limit order there. Ding! But you know what? I also bought Bitcoin at 64. So where am I right now in this whole process? I'm somewhere at break even for the month of August, just on my August purchases. And so there you go. I tell you this to let you know that I truly have a lot of skin in the game on this one. So it's not like you're hearing some analyst. The world doesn't need any more analysts. There's tons of them out there. And so for me, I like to, with everything I do, put my money where my mouth is, folks. So that's August. August really kind of sums up like this. Things are moving in the directions we expected them to in reference to the stock market, in reference to commodities like gold, also oil. We expected to pull back, and it's pretty much happened. And Bitcoin has not happened the way we expected to. We could talk about September. Let's talk about what we see happening in September. So September is one of those months where, I started looking at the money calendar, that's my calendar, folks. That's my rules-based. That's my flag. That's my flagship. All right. It's something that I do that nobody else does. It's something I can talk to you about that I know nobody else can. We can all talk about the stocks that are going up, the stocks that are going down, and 52-week highs, 52-week lows. And, we can talk about that, and you can get that information anywhere from anyone. Oh, speaking of which, 52-week highs. I forgot to talk about that. This is an interesting part as we're coming out of August, and then I'll get back into September. But do you know that we're at the end of August, and of the S&P 500, the number of stocks out of 500 that are hitting right now new 52-week highs, I've got it at 88 to 89. 88 of these stocks in the S&P 500 are hitting 52-week highs. And there's a bunch more that are up in the top 10%. In fact, if I look at the top 10% of the S&P 500, guess how many of them are in the top 10%? 215. So 215 stocks, 43% of the S&P 500 is in the top 10% of its range, of its year-to-date range. That's something to be said for the bullish camp. Now, how about the bears? Well, what's down at the bottom? What's hitting new 52-week lows right now? Of the 500 stocks hitting 52-week lows, how many are there? There's 3. There's just 3. And you know what? You and I know all 3 of these stocks. You might not know what they are right now, but I'm going to tell you. Walgreens, 52-week low at $9.30. This thing was at it was $26.66 a year ago. Number 2 of the 3 stocks that are hitting 52-week lows, Dollar General. What? Dollar General was $160, $161 last year, $86.85. This thing has almost been sliced in half. I mean, Walgreens has been sliced by 2/3. Dollar General has been sliced in half. Are you ready for another one? Here's the third. These are the only 3 stocks that are hitting new, fresh 52-week lows this week. Okay, so Walgreens was 1, Dollar General was 2, Dollar Tree is the 3rd stock, which was trading at $150. That was its 52-week high over the last year. It hit a fresh 52-week low this week of $85.20. This one's down, what? I mean, literally the same. It's been sliced by nearly 2/3. What are these guys doing wrong? I know what Walgreens is doing wrong. You know what Walgreens is doing wrong? They're closing up stores. They're just not able to compete. What are the dollar stores doing wrong? You know what the dollar stores are doing wrong? They're doing a lot of things wrong, but I'm going to tell you what I see them doing wrong. People do not look at them as dollar stores anymore. They used to be everything's a buck. You knew what you were getting. You knew what you were paying for when you walked through the doors. Now, they need to call these the $1.50 stores or the $2 stores and even higher, because they cannot sell stuff for a buck in these stores anymore, not with inflation, which has gone as high as it has. And I don't care what the Fed says when it comes to inflation coming down, because you know what they leave out? They leave out food, all right? They leave out food and a couple other categories. And one of the categories they leave out is that really low category that they consider cheap anyway. But when something was selling for $1 2 years ago, and now you got to pay $2 for it, that's a 100% increase. That's what's causing dollar stores to drop, because they used to be category dominant. That meant you knew what you were paying for when you walked through those doors. And if you had $10, you were going to buy 10 things. Well, if you didn't have to pay tax. Now you don't know what your $10 is going to buy you. Maybe it'll buy you 5 things, maybe buy you 3 things at a dollar store. Who knows? That's hurting the dollar stores. Okay, back to September. So I talked about the money calendar. I'm sorry, guys. I'm ADD in it today. Let me get back on track. So the money calendar is my thing. That's my thing. Anybody else tells you they got a money calendar, they're lying to you. All right. What's my money calendar do? Well, what it does is it looks at all optionable stocks. It throws out most of them. So I'm left with about the top 10% of optional stocks. All right. These are the ones that trade in pennies. These are the ones that have weeklies. And it also includes ETFs. So I look at these and I'm looking for patterns. I'm looking for patterns in at least 10 years that have got to be 90% or greater. They got to have some sort of a decent, not just accuracy, but they've got to have a good profit that they've averaged over that last minimum 10 years. And I got to see trends. I got to see trends where the patterns are getting better and better and better. Now, this is where it gets a little confusing, because I did a video on this week, and I want to talk about it a little bit. So I talked about looking at the money calendar. It was really a mixed bag. It told me that the first 2 weeks of February, where the heck am I in February? First 2 weeks of September, bearish. Last 2 weeks of September, bullish. And I looked at that and I said, that's basically looking at any pattern that starts in 5 days and ends in 30 days. So then I decided to go in and sort the data, because that's what I do. I'm a data nerd. I sort the data. And so I sorted the data and I sorted it into 3 categories. Those money calendar patterns with 20 days or less, patterns between 20 days and 40 days, and patterns that were 40 days to 60. Here's what I came up with. On the 20-day or less patterns, think about September. How many days do we have in September? How many trading days do we have in September? We have 19 trading days in September, or maybe 20. I'm looking at the markets closed on Monday, but I run all the way through the 27th. That's my full trading weeks. We have 19 full trading weeks. Do you realize that 16 of those 19 days are bearish when you look at short-term patterns, 20 days or less? Then we start to turn bullish in the last 3 trading days of September. Then I said, well, let's look at the medium-term patterns. Those are patterns between 20 and 40 days. That same month of September, half of the days get bullish. The first 9 days are bearish. All right. Then I look at, say, the 13th, and it's kind of 50-50. But then you look at the 16th all the way through the rest of the month, it turns bullish. Now, what has happened here? We're looking at medium term. Those medium term patterns are between 20 and 40 days. Now, they're 20 to 40 trading days, okay? So add on weekends, add on holidays, and you're talking about something that's really going to be about a month to 1 to 2 months. Now, what about going out 2 months to 3 months, the 2 to 3 month pattern? Here's where things get interesting. The longer term patterns, the entire month of September, bullish. Starting on Tuesday, any patterns that I see that have 40 days or more, I get mostly bullish patterns, and they just get better and better and better for the month of September. So patterns like Deckers Outdoor. Okay. By the way, I'm going to talk about Deckers Outdoor next week. All right. I'll tell you a little bit more about that before I end the podcast as well. Got 2 things I want to tell you about next week. So, Decker's Outdoor. I like the patterns on Deckers for September and October. I like SPG, that's Simon Property Group. I like that SPG. I like Hilti, HLT. These are bullish patterns. They're not all bullish. Okay. Annaly Capital, NLY, that still looks kind of bearish. FIS, another financial stock, looks kind of bearish. So the financials look kind of bearish going in. But then, you get outside of financials and things actually look pretty good with Decker's up there on top. Interesting. So, and I mentioned this earlier in the week that, overall, seasonals look bearish if you're just going to be, trading inside the month of September. It's going to be mostly bearish. But if you're taking trades, and I'm talking about you buy and hold traders, or those of you that are medium or long-term option traders, you get 1 to 2 months out, and things start to look bullish after the middle of September. You want to look at stuff that's bullish starting in September? Look at patterns that are 3 months from now. Okay, so starting in September. You want to be looking at October, November. You want to be looking at patterns that run through the end of November, maybe the beginning of December. All right, that's what we see. Okay, so that's the patterns I'm seeing right now. By the way, next week, all right, next week, I'm going to be talking about Decker's Outdoors. I actually am put together a video on shoes, on shoe stores. So be on the lookout for that next week. All right, we got a short week next week, so I'm going to do a little, maybe 2 videos next week. All right, maybe 2. Not going to do a podcast next week, but I will do a couple videos for you. One of them's going to be a shoe video. And no, Al Bundy's not going to be part of it, but I will be talking about the top 10 shoe stores and shoe retailers. And when we slice and dice them up, what I like and what I don't like. Okay. Here's the second thing I'm looking at. This is going to take me a little longer. All right. I might have this for you by the end of the month. So we got elections coming up in about 2 months. Okay. I'm seeing a lot of opinion on what stocks are going to go up if we get a Trump presidency. Things like fossil fuels, Bitcoin, because he's talking about it. Bank stocks more likely will go up. We have a history. We can go back and we can look at what went up during Trump's first term to see if he were to win again, what is likely to go up in his second term. We can also, and I see this too, what stocks go up in a Harris presidency. And I'm thinking stocks like solar, wind, EVs, pretty much anything green. But we can also go back and see, what moved higher during President Biden's term, because Harris's term is more than likely going to be pretty much the same. So here's what I'm doing, because I'm not going to opinionate. I'm going to data dive, and this is my question, okay? What goes up or what goes down regardless of who wins? I can tell you what's going to go down based on, it doesn't matter whether there's a Republican or a Democrat in office. The U.S. dollar seems to always go down for the most part. If the dollar decays over the next 4 years, like it has been, because, the deficit's out of control, and now the interest on the deficit alone is killing us. The dollar is losing about 8% of its purchasing power per year. And a little bit of that is inflation, but a lot of that's debasing. All right. If that continues, then we're talking about the dollar being worth about 76 cents come 2028's elections. Yikes. I mean, obviously time will tell, but that's not what I wanted to question you as we end our podcast today. The question I'm asking myself, and I will be answering to you, I call it the $1 million question. What stocks go up from election day to year's end, that November, December timeframe, regardless of who wins in November? All right. I have decades of this information. I'm compiling a list. And as soon as I'm ready, I'm going to share this information with all of you. It might be a live webinar. It might be a report. It might be a combination of the both. But regardless, my plan is to, within the next 30 days, I'm going to get it in your hands before Election Day. All right. I'm looking at having this all ready in the next 30 days. So look forward to next week and look forward to next month because we've got a lot of interesting things coming. Till then, hey, I hope you have a great Labor Day weekend. You know, if you're looking for me, I'm going to be somewhere in the Siesta Key area. And if you know where Siesta Key is, it's like finding a needle in a haystack. I'm hoping to get in and out of there before everybody does. But anyway, regardless, I hope you have a great Labor Day weekend. Stay safe, stay warm, stay dry, stay liquid. I'll see you next week.